Welcome back. Now, Old Mutual has reported a 29% increase in interim adjusted headline earnings. Even though the group faced some challenges in the sales environment, the company remains focused on executing its plans efficiently, allocating capital wisely, and driving returns for shareholders. CFO Casper Troskie joins us now to provide further insights. Casper, thanks so much for your time today. So double-digit growth in your bottom line. And let's start there by maybe just mapping out some of the biggest contributors to the growth.
Yes, we had a very good performance from an earnings perspective in the first 6 months. And there are a number of factors driving that. Firstly, we saw very strong equity and bond markets in the first 6 months. And our business, we have a lot of our clients' investments invested in markets. So when markets perform well, that also assists our profits. Secondly, we had very strong performance from our Old Mutual Insure business, where we've seen over a number of years a lot of hard work paying off in the last 6 months, where we've seen a significant improvement in our underwriting margin to 9.7%, and that saw a 71% increase in earnings in Old Mutual Insure. And then our personal finance business saw strong recovery from the prior year. We had seen a spike in mortality claims last year, and we were able to increase the profits in that business by about 33%. So those were the big underlying drivers of the performance.
And it's quite interesting to see how stronger markets really boosted the group's bottom line. But is this sustainable? Do you expect this to continue playing out? I mean, here at home, we have seen markets continue to be resilient this year. Over in Malawi, is that the case?
I think the returns that we saw in the first 6 months were better than we've seen in a long time.
Yeah.
So if they continue, we'll be smiling. But we are expecting them to probably be a little bit lower in the second half.
And what's playing out?
It's still positive.
Yeah. What's playing out in the Mass and Foundation cluster? Is the tough economic environment still weighing on that segment where, households are under pressure and don't necessarily have enough discretionary funds?
Yes, we've seen continued pressure in the Mass and Foundation markets, and we've actually had to adjust our what we call persistency assumptions. So our clients are lapsing their policies at a higher rate than we assumed.
Yeah.
So we did make a basis change at 30 June to cater for that, and that has an impact on our profitability in the first 6 months. But the other factors that I spoke about obviously outweighed the knock that we took in earnings from making that assumption change.
And just zooming in further into some of the other units, particularly the value of new business, Casper, margins there also under pressure. And I think last time we spoke to the company, the group noted that in FY24, new business volumes were normalizing. Is that still the case? As we did see quite like maybe a few years ago, we did see pent-up demand and pent-up volumes in new business.
Yeah, so if we look at our new business volumes and our life APE sales, those were only up 1%. So obviously that is not a satisfactory result from our perspective. And that also then has an impact on the new business margin. So the two things that would have impacted on our new business margin is the fact that we made that assumption change that I spoke about earlier. So that would have had an impact on the margin, as well as the lower sales that we saw in the first half. So in our Mass and Foundation business, we still had good volumes, but in personal finance and some of the other business, we actually saw, a reduction in sales.
And in more positive news, Old Mutual today announced a buyback with a hefty 3 billion rands. Markets seem to be liking that move. Just walk me through the rationale behind that.
Yes, the business obviously has been in a very strong capital position. We saw in the first 6 months very strong cash generation from our business, and we've seen that over a number of years. We feel, the management team and the board feels that where the share price is trading today is below what we see as the fair value, and therefore, it makes sense for us to do a share buyback, and therefore we've announced quite a sizable share back, which will take place over the next few months.
You talk about Old Mutual being in a strong cash position, Casper, and I wonder how much that then goes through or filters through to your capex, and particularly capex that goes into OM Bank.
Yes, so if you look at our cash generation, if you look at the detail in our slides and our presentation, we have set aside another 1.6 billion for Old Mutual Bank for 2026. Obviously, we had set aside the funding for the bank in 2024 for 2025. So if you take the 1.6 and the 3 billion buyback, we still have more discretionary capital available. So really in a strong cash position, even after taking into account those two investments.
And that offering will only be available to the public in the fourth quarter, right?
So the offering is, we've already launched the offering to staff.
Okay.
And we launched the offering to the public during the second half. So right now we are busy converting money account customers that were on the Bidvest license into. So effectively, it is open to the public today, but we'll have the full public launch and our campaigns a little bit later in the year. But it is up and running today as a fully fledged bank.
All right, then before I let you go, Casper, just walk me through the outlook for the second half, touching on, I guess, some of the strategic priorities for Old Mutual. The group has a simplified structure. There's also been some new appointments today, and also that focus into East and West Africa as growth markets.
Yes, so we've, Yuri, as our new CEO, has announced, four key strategic priority areas. So, and we'll be focusing on those strategic priority areas in the next few months. The first is obviously, building on our very strong South African businesses, where we have mature businesses that are at scale and that are generating significant cash. Secondly, establishing the right to win for our Old Mutual Bank is going to be a key focus. Thirdly, looking at how we can deepen our business in the Southern Africa region in Africa, and thereafter looking at what growth opportunities exist. We are looking at that through a lens of 3 horizons. So whilst our return on net asset value is what we see is below the target range, we will be very disciplined with our capital allocation. But as we are able to increase returns, that will allow us to be a little bit more expansive with capital. But yeah, following a very disciplined approach to capital allocation in the next few months, and really focusing on improving our margins. So that's, looking at sales and looking at managing our expenses effectively.
All right, let's leave it there. Casper, thanks so much for your time and just taking us through the 6 months that was for Old Mutual. That was Old Mutual's CFO, Casper Troskie.